Banks, they store your money, finance your home, power businesses, and even fuel entire economies. But how exactly does the banking industry work? Hey there, welcome back to Worldwide Industry Pulse. Get ready for exciting insights into the banking world, covering digital banking, fintech innovations, and the latest technologies shaping the future of finance. Stay tuned as we dive into the ever-evolving landscape of global banking. The banking industry is a cornerstone of the global financial system, providing services that affect every part of our daily lives, from individuals managing their savings to large corporations seeking loans for expansion. Simply put, the banking industry facilitates the flow of money in the economy, providing critical services that allow individuals, businesses, and governments to function efficiently. Banks serve a few primary functions. First, financial intermediation. Banks bridge the gap between people or businesses that have extra money, also known as savers, and those that need money or borrowers. They take deposits and lend out funds for various purposes, including mortgages, business expansion, and personal loans. Second, payment systems. Banks enable payments and money transfers through methods like checks, wire transfers, credit cards, and electronic payments. They provide the infrastructure that allows money to move through the economy. Third, wealth management and investment. Many banks also offer services to help customers manage their investments, offering advice, trading services, and financial planning. And lastly, economic stability. Banks play a central role in ensuring the stability of the financial system by controlling money supply, managing inflation, and ensuring liquidity in the economy. The concept of banking dates back thousands of years, with some of the earliest forms appearing in ancient Mesopotamia around 2000 BCE. Temples and palaces often served as places to store valuables and lend out resources such as grain. Medieval banking. The first modern banks were established in Renaissance Italy in the 14th and 15th centuries, where merchant families like the Medici in Florence began offering credit to traders. These early banks laid the groundwork for modern banking systems by providing loans, transferring money, and managing debt. 18th to 19th century expansion. During the Industrial Revolution, banks became critical in financing large-scale infrastructure projects and supporting international trade. Central banking systems were established in many countries to stabilize currencies and regulate private banks. 20th century and beyond. In the post-World War II era, global banking grew rapidly alongside the internationalization of trade and finance. The introduction of credit cards, ATMs, and electronic banking services in the latter half of the century transformed how consumers interacted with banks. The banking industry can be categorized into different types of institutions, each serving a unique function within the economy. First, retail banks. These banks cater to individuals and small businesses. Their core services include savings and checking accounts, credit and debit cards, personal loans, mortgages, and everyday banking services. Some well-known retail banks include Chase in the USA, Barclays in the UK, and ICICI Bank in India. Second, commercial banks. These institutions primarily serve businesses, offering more complex services like business loans, credit facilities, treasury services, and merchant banking. Commercial banks help companies manage cash flow, finance growth, and handle large transactions. Third, investment banks. Investment banks are more specialized, focusing on large-scale financial transactions. Their services include underwriting, which helps companies issue stocks or bonds, facilitating mergers and acquisitions, and providing financial advisory services to corporations. Famous investment banks include Goldman Sachs, Morgan Stanley, and JP Morgan Chase's investment arm. Fourth, central banks. Central banks play a unique role in overseeing and regulating the entire banking system of a country. They control monetary policy, manage inflation, and oversee currency circulation. Central banks also regulate private banks and ensure that they adhere to the legal frameworks designed to maintain financial stability. Key examples include the Federal Reserve in the US, the European Central Bank, and the People's Bank of China. And finally, credit unions and cooperative banks. These are member-owned financial institutions that operate similarly to retail banks, but focus on serving the needs of their members, often offering lower fees and better interest rates. Examples include Navy Federal Credit Union in the USA and Rabobank in the Netherlands. Some of the largest and most influential global banks include JP Chase from the USA, which is one of the biggest players in global banking, with significant influence in retail, commercial, and investment banking. HSBC from the UK, known for its international reach, offers services in over 60 countries and territories, making it one of the most global banks. Deutsche Bank from Germany, a major player in investment banking and financial services, has a strong presence in Europe. ICBC from China, the largest bank in the world by total assets, the Industrial and Commercial Bank of China has significant influence, particularly in Asia. These global banks operate across various markets and are subject to different regulatory environments, creating complex operational structures. Additionally, banks in emerging markets like India, Brazil, and Southeast Asia are also growing quickly, shaping the future of the banking landscape. Most banks operate on a fractional reserve banking system. This means that banks are required to keep only a small portion of deposits on hand as reserves while lending out the majority. For example, if you deposit $1,000, the bank might only need to keep $100 in reserve and can lend out the remaining $900. This process allows banks to generate profit through interest on loans, but also increases the overall money supply in the economy. The banking industry offers a variety of products and services, including checking and savings accounts, which are the most basic services, allowing people to store and manage their money for daily transactions or long-term savings. Loans and mortgages, where banks lend money to individuals for purposes like buying a home or starting a business. They make money by charging interest on these loans. Credit cards, which banks issue to allow consumers to borrow money up to a certain limit. In return, the bank charges interest on the borrowed amount. Investment services, where many banks also provide financial advice, wealth management, and investment products like mutual funds and stocks. Over the past 2 decades, the banking industry has undergone a massive digital transformation. Technological advancements have reshaped how banks operate and interact with customers. The introduction of mobile apps and online banking services has made banking more convenient. Customers can now check their balances, transfer money, pay bills, and even apply for loans, all from their smartphones. The rise of fintech, or financial technology, companies has significantly disrupted the traditional banking model. Fintech companies like PayPal, Stripe, and Square have made digital payments and money transfers easier, while companies like Robinhood and Acorns offer investment platforms with no physical banking presence. Neobanks are online-only banks that have no physical branches. Revolut, Chime, and Monzo are examples of neobanks that offer all banking services digitally, with lower fees than traditional banks. Some banks are exploring blockchain technology to improve security, reduce costs, and speed up transactions. Additionally, the rise of cryptocurrencies like Bitcoin and Ethereum has introduced a new frontier of financial innovation, with some banks experimenting with crypto offerings and blockchain-based transaction systems. Despite its critical role in the economy, the banking industry faces several challenges. Banks are heavily regulated by governments to prevent financial crises. These regulations can sometimes limit profitability or lead to significant fines if not followed properly. With the increasing digitization of banking, cyber attacks and data breaches pose major risks. Banks must invest heavily in security to protect their systems and customer data. Global banks are affected by economic factors like inflation, interest rate changes, and geopolitical risks. Economic downturns can lead to increased defaults on loans and decreased profitability. Traditional banks are facing increasing competition from agile, tech-savvy fintech startups that offer lower fees, faster services, and better customer experiences. As the banking industry evolves, several trends are expected to shape its future. Artificial intelligence, or AI, is being used in many areas of banking, from fraud detection to customer service. Banks are leveraging AI-driven chatbots, personalized financial advice, and machine learning algorithms to improve efficiency. Increasingly, banks are focusing on sustainable investments and socially responsible banking. Institutions are moving towards green financing, offering loans and investment products that support environmental sustainability and social responsibility. Open banking allows third-party financial service providers to access bank data to create new apps and services. This increases competition, but also offers consumers more personalized financial products. Cryptocurrencies are starting to be viewed not just as speculative assets, but also as potential currencies of the future. Some central banks are even exploring central bank digital currencies, or CBDCs, which would be government-backed digital currencies. The banking industry is at a pivotal moment, balancing between traditional practices and rapid technological advancements. As the world becomes more digital, the future of banking will likely revolve around convenience, security, and innovation. However, the core function of banks, managing money, providing loans, and facilitating economic growth, will remain essential. Thanks for joining us on this deep dive into the banking industry. From digital innovations to the future of finance, the world of banking is changing fast, and we'll keep you updated every step of the way. If you enjoyed this video, make sure to like, subscribe, and hit the notification bell so you never miss out on the latest insights from Worldwide Industry Pulse. Have any thoughts or questions? Drop them in the comments below, and we'll catch you in the next episode. Until then, keep an eye on the industries that shape our world.